Good morning, traders. Today is Friday, April 22nd. My name is Charles, and this is the Pirate Traders live stream. Welcome, welcome. All right. Well, what happened yesterday in the markets? Well, the market tried to break out to the upside. It failed, pulled back down into balance, and then rotated to the opposite end. So let me just draw that balance area for you so you could see. That was the balance area. So it looked above yesterday. It failed to get continuation to the upside, pulled back in, and then traded to the opposite end of balance. Normally, when we get to the opposite end of balance, we would look for another look below and fail that could take us back up to the opposite end, or a breakout to the downside, a failure to stay inside the balance and break out to the downside, which we would look for excess in that direction. Okay. As for today, the way yesterday traded, it did something very, very unusual, which is that it left. Okay, well, sorry. Started a little bit late this morning. First order of business is going to be the gap fill to the upside. We're looking to get to yesterday's low, 43.80, and we're looking for resistance there. Anything other than that is a gap and go to the downside, which is very, very bearish. Okay. But anyway, just stepping back to talk about the concept of what's happening. So even on the idea of if we were to push back up into balance today, I don't think it would be possible to get to the opposite end because we left so many single prints behind yesterday. And each one of those, the base of the spike and each base of single prints on the way down is going to be massive resistance on the way back up. So getting back through yesterday's range once again to the upside would require a lot of momentum. It would require something very, very bullish to get us through there. So right out the gate this morning, my thought is either, just like the overnight did, either just rotation down here at the lower end of the range or continuation to the downside. I don't think it'll be possible to get back up to the opposite end of the range today. So that is something to keep in mind. I'm certainly more bearish in that regard because of the amount of single prints we left behind. On top of that, we had a spike down, which is bearish. We opened below the spike, which is the most bearish scenario. And we have a gap at the moment. So there's a lot of reasons to be bearish on the market here, particularly the NQ. Sorry, I haven't even had a chance to load this up yet. Because you can see that the NQ has already clearly yesterday broken that balance area. So it is already in the process of excess to the downside. So that is a little bit more bearish than the ES, which is just currently dancing at that low right now. Okay. So first resistance above is going to be yesterday's low at 43.80. If we get resistance there, we look for continuation to the downside as a gap and go. If we start to push up into yesterday's range, the next resistance is this massive node of volume and time from the overnight. That will be resistance. It's worth noting we basically have a 45-degree angle from the high. That is also resistance. And then if by some feat of sheer magic we were to get through all of that, the next resistance is the base of the spike up. So the market has a ton of work to do to get back up into balance, which is why I feel like we're either going to go sideways or lower today. Well, Charles, what about short covering? What about, maybe people got themselves too short yesterday and now they got to cover those shorts and that'll get us back up in there. I don't think so. I think yesterday was a change in the market and I think there were strong sellers or previous buyers exiting their longs that caused this. So I don't necessarily think that we need to have any kind of short covering rally. I think people either exited their longs or if they got in short, they're going to be strong hand sellers and likely stay in it through the weekend. All right, so we're testing yesterday's low for resistance. Okay, resistance at yesterday's low is a gap and go. So that is bearish. The next target to the downside is the poor low from 418 in need of repair at 64.50. Do we get more selling after that, or do we just repair that and then head right back up? More selling, I'll get bearish for continuation to the downside. Diego, good morning to you. Scooball, hello. S&P Attic, morning. MW, good to see you. Rev in the house. Cyrus is here. John, T-Bay, Caffeine, Hustler forever. Rev, I appreciate the free ride along yesterday. What a ride it was. What a ride it was. Yeah, it was. It's funny how chaotic it felt while it was happening, but now it doesn't look like that big of a deal after the fact. David Glass, good morning to you. Jose, welcome. Good to see you. Dean, good morning. Aviv, good to see you. Jocklo in the house. Jack is here. Boss Man, good morning. Saab, good morning to you. Aviv, it seems like traders are waiting for next week's earnings with all the big tech companies. I don't know. I mean, I'm not good at that fundamental type of analysis. Why is the market doing what it's doing? But I can tell you it broke out of balance to the downside, and that is bearish for continuation. Jay Trader, good morning to you. Scooball NQ without a gap. Nope, the NQ did not have a gap. But again, I'm looking at the balance, right? Balance area. That's what's important to me. We often get as much excess as the size of the balance area. So you would look for a move, like that. And we know how momentum works. First you get the panic sellers, then you get the FOMO sellers, and it just keeps going. Until I don't know where it V-shape reverses and we're all the way back up in balance. But no way to know when that's going to happen. I would say for the NQ, if they can get above the overnight high, look to push up to like 13,820, looking for resistance there. But if they get below yesterday's low, which is 13,680, it's going to drop like a brick. People are gonna panic. Okay, so on the ES, that's the repair of the poor low. Let's see if that's enough to bring in some buyers. If not, I am bearish for continuation to the okay. No buyers. All right, they got me. I'm bearish, looking for resistance around the halfback at 43.70. Okay, next major support for the ES is around 43.46. Now looking for resistance up at 43.68 as we pulled the half back a little lower. Rocket, I am not trading all day today. You don't have to. I am. Chief, good morning to you. Ronald, good to see you. David C. in the house, good morning. Seven-mile reach rejected that volume quickly. Yep, there's fear in the air. There's blood in the water, as they would say. Scott, oh, my cat just cost me an extra 40 points on the NQ by jumping up as I clicked to place a stop at 31. Man, trading rules, bro. New trading rule. Got to keep the cat locked out of the office. Every mistake is an opportunity to learn and develop a strategy to prevent that mistake in the future. Rob, good morning to you. Chief, do you layer in and out of your trades, or are you all in or out trader? This is not going to be very helpful to you, but all of the above. It just depends on the moment. Rotational type of trades, I generally layer in. But if it's like a trend trade, like this morning, seeing that resistance at the high, just get in the trade. And then you can layer out. But you just got to build that position right away if they're going to trend. Skewball bearish as duck. Not a huge animal person, but I don't think ducks and bears have much in common. Not like a scientist or anything, but. All right, so we're getting a little bit of support here, just above that 44 level. So now we're looking for resistance up at 57. If not at 57, up at 63 for continuation to the downside. Scott, but he's normally a good luck charm. Well, then you got to keep him in, and you just must accept that every now and then he's going to cost you 40 points. Eldora, good morning to you. Trading Donkey PMI flash, not as bad as it could have been. John, this day is so beautiful, it's almost enough to make a grown man cry. Do you mean outside? Pavel, good morning to you. If you have not yet, please smash that like button. We got 89 people here, but only 32 likes. Nothing wrong with giving the pirate a little thumbs up. To say you're an okay guy, pirate. We don't dislike you. We like you. Or if you must, a thumbs down. You know, freedom of speech. Trading. It's a beautiful day. T-Base says ticks are getting green. Will they hold? Well, I guess we're about to find out. But that's only really to get us up into resistance. The momentum is to the downside. Remember, spike down, bearish momentum. Gap and go, bearish momentum. So that is more of a sell the rip and then buy the dip than vice versa. You're looking for resistance. So next potential resistance is right around the halfback where we are now. All right, we're back through the halfback. That's a little less bearish to see. Normally, if we were going to get a lot of momentum to the downside, there'd be sellers waiting there. So next resistance is going to be the node above at 69. Okay, so we got the buyers trying to defend this level over and over again, bringing in support here. So if that breaks, we can look for a push lower to squeeze out some of those buyers. Scoopball says NQ look below yesterday and fail now. Um, yeah, I think that's probably too early to make a call like that. I would not get bullish on the NQ in any way, shape, or form unless you got above the overnight high. And even then, there's resistance waiting. Okay, so like I said, breaking through that support will probably lead to a little push lower, back down towards the lows on the ES. If 44 breaks, the next target to the downside will be 34. Scoopball, how many times do we get a trend day after a huge clear trend day? Probably more often than you think. When you call it a trend day, like a quote unquote trend day, will it officially trend like one time frame for hours and hours? I don't know, but I mean, balance area, breakout, up, 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 rotation, balance area, breakout, down, 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 right? Balance area, breakout, down, 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 down. Like you break out of balance, you get excess. So we could have down day, down day, down day. No problem. Now, will it be like a rotational day that ends lower or a straight trend day? I don't know, but momentum is momentum. It will shock you how far they can push it. All right, ticks getting above the zero line, a sign the buyers are trying to defend. Once again, looking for resistance. Jack says NQ, mine says short, Gut says long. Diego says, what does the chart say? I'm with Diego. Just trust the market generated information. Sometimes your gut will be right, but generally the info. Oh, okay. Yeah, so once again, I wouldn't consider going long unless you get above the overnight high. And even then, just to look for resistance directly above. Arthur, morning everyone. Papa Powell spoke in downtown markets. Yeah, all he did was say he might do what we all think he's going to do, a 50-point rate hike, and everybody just lost it. What? He might do what we think he's going to do? What? It's a good point, Donkey. Donkey says, I don't think Powell had anything to do with yesterday's move, was trending down before he spoke. That is true. It was already pretty nasty before that even happened. All right, well, spending this much time dancing around in here is actually a little bit bullish. Not necessarily bullish isn't the right word, but, a little less bearish. Again, a gap and go, as I always talk about, a gap and go is about momentum. It's about people feeling like they are going to miss their chance to get short. This market is giving them plenty of chances. So that's not quite a strong momentum. But it is, of course, still bearish. Gap and go. spike down, value lower, ticks below zero line. Okay, not the ticks, but the rest. I will remain bearish as long as we remain below yesterday's low. Looking for resistance and continuation to the downside. And switch back to neutral if we get up into yesterday's range. Scott, I wholeheartedly believe it was going down and then the news just matched up with the narrative. Greg, Fed's daily comment about 75 points added to it. Yeah, it could just be that Powell not saying something positive kept that negative momentum. I mean, who knows? You never know why the market does what it does. Who knows? Diego, does your course teach market profile theory only or also provide setups to profit from it? Most books courses talk about the beauty of market profile, but few talk about setups. Yeah, I mean, there's a few setups mentioned, but no, that's because market profile doesn't have setups. That's not how it works. Market profile, that's like saying, what are candlestick setups, right? Like every candlestick setup that exists still has like a level of, your own opinion that you have to put into it. Is this a breakout? Is this a bear flag? Is this a blah, blah, blah? And that's what market profile does, is it just lets you understand what is happening in the market in a particular moment. But as far as like what trade setups you want to take, you have to figure that out for yourself. So a great example would have been some people, we opened with a gap down this morning, right? Some people might have thought, I want to go long to fill the gap. That's the trade I want to take. And I'm willing to risk the fact that we may get a gap and go. We may immediately start trading lower. I'm willing to take that risk. Whereas me personally, on a daily today, I would have rather wait for the gap to fill and then look for resistance there, because that would give me a better risk reward. I only have to risk a few points. Once it pushed up above there, came back down, I could get into a short and only risk a couple of points. So it's all a matter of like personal opinion. And I know that frustrates people. It drives them crazy. They're like, and they always say the same thing, which is like, well, why don't you just tell me your way of doing it and I'll start from there. And I tell them that's not how it works. You have to figure it out for yourself because your personality is different than mine. So no, it's not really like a specific trades setups type of course. It's a learn how to understand what the market is doing. Learn how to frame your mind and also how to develop that system. How do you look for trades? How do you figure out what is the best way to enter and exit and put your stops and so on and so forth for you? It's really more of a course to teach you how to think like a trader, more so than giving you exact setups. Because like even a great example of this is like if I'd have made the course a year ago and I'd have given you all my trade setups, I don't trade any of the same trade setups I did a year ago. The market is totally different now. It's moving different. I've changed completely my strategy over the last year to match the changing market. So if I'd have made that course a year ago and put in a bunch of specific setups, they'd be worthless right now. So better I teach you how to think for yourself. That way you can adapt with the market. Your strategy can adapt with your changing life circumstances. There truly is more than one way to skin this cat. Mike, trading is one of the most personal things a person can do. I don't know. I can think of some more personal things a person can do. Chief, I find it introspective. I have learned a lot about myself during my trading career. Me too. And also, it's completely changed the way I look at the world. Like, learning to think in probabilities to be a trader has caused me to think in probabilities in everything I do in life. It's really interesting the way it shifts the way your brain processes information. Okay, so once again, if 44 breaks, the next target is 34 to the downside. Got ourselves a poor low here in the B period. Normally we get a push away from the poor low. If we immediately repair it to the downside, that is more bearish. John, one of the few downsides to trading is being up to date on the news, which gets irritating. I love that. You can kind of, the nice thing about trading though is at least financial news and stuff. While it's a terrible place to look for trade ideas, is actually one of the more like politically, anyways, one of the more fair news outlets. Like you tend to hear about things more matter of factly than you do on the other networks. So as much as I hate CNBC, they got that going for them. Okay, if we break the overnight low on the NQ, next target to the downside will be 13,620. Oh, that is the overnight low. Oh, never mind. Hold on. Say 13,570 would be the next support. Okay, so breaking 44, the next target to the downside on the ES is 34. Got some volume there, might act as temporary support. Joclo, the book Super Forecasting is great about probabilities. I've never heard of that. I like Annie Duke's book, Thinking in Bets. That one's great. Greg H., why do you hate CNBC? Well, I don't hate it, but you know what I mean. I just don't trust it. It's BS. The pundits on there, they talk in circles. They never say anything real. They just bring on multiple people to give every opinion. So like one guy will give a bullish opinion, one will give a bearish. Like it's not really giving you any information. And they often let like hedge fund guys basically, what a lot of times will happen is like, say you're you know, a fund manager or whatever, and you're in a position and you want to lighten it a little bit. Like they'll literally just go on CNBC and talk about how great this stock is that they're invested in. And then that day it gets a huge spike from retail and they offload onto retail and then it drops. It's like a very regular thing that happens. And another thing that annoys me about it, this is something that Jon Stewart has been talking about for years, is that like the financial news networks like CNBC and you know, Fox Business and Bloomberg and all these, they have inside access to everything. They have access to all the CEOs, to all the major hedge funds, to like everything. And yet they have never cracked a single case ever in terms of like catching, you know, like what reporters are supposed to do to catch corruption or this or that. Like they never called like the financial crisis before it happens. Like they never talked about mortgage-backed securities or anything like that. So it makes you realize they're not really reporters. They're not really there to like hunt out the truth and share it with the audience. They're like a product. They're entertainment. And that's what bothers me. Okay, I don't love the exactness of all the buying right on 39.50. If that breaks, it'll cause a little pop lower. Trading Donkey looks like a button here. What does that mean? You mean that little node of volume by itself? Mark, what are my big resistance and support lines? Well, right now I'm more focused on the momentum, right? But I would say the next resistance above will be either 46 or 53. And the next support below will be either 32 or 24. Bottom. My bad. Yeah, I think it's too early to make that call. Maybe we can get those ticks back above the zero. S&P addict, curious, do you think the market has changes or you have changed? Ooh, boy, we're getting metaphorical, metaphysical. We're diving deep. I think it's obviously a little bit of both. The markets are constantly changing. There's no way to say the markets move exactly the same way all the time. So you cannot deny that the markets are changing. But obviously, yeah, I change too. Every day I learn something new. My perspective changes a little bit. So I would say a little bit of both. Okay, and with the printing of the C period here, we've left some single prints behind in the B period. So that increases the odds that we will push back up to backfill those single prints, but then look for resistance right there at 43.45. We've also now begun to one time frame lower, which is obviously bearish. So at this point, we can say the market is likely to continue lower unless it can get the C period high above the B period high, or the D above the C, and so on and so forth. The market is trending lower. All right, guys. Well, thank you so much for watching. If you have not pushed that thumbs up, please hit it on your way out. I sure would appreciate it. Also, you can always join the brigade. There's a link in the description. It only costs $10 a month, and then you get to hang out all day, every day. And lastly, I would say the very first link in the description, that is the e-course. I know it's a little pricey. It costs $100, and that seems like a big hit. But if you got nothing going on this weekend, I would highly recommend making that buy, watching that course, and just changing your life forever. All right, guys. Have a great weekend, and we'll see you on Monday morning. Bye-bye. If you're in the brigade, the email already went out, so check your spam folder if you haven't seen it.